Hello, lovely people out there. How are you all doing? I'm Kate Hill, and as always, I'm here to give you the best unbiased and honest commentary about our property markets, along with some really awesome hints and tips. I've got news for you today on vacancy rates, on stock levels, and consumer confidence, so stay tuned. Now, just quickly before we get started, if you are interested in what is happening specifically with the Sydney property markets right now, then you need to watch this video right here. Okay, so let's get into it. The federal government says that it is very pleased that high consumer confidence is leading to a strong housing market, and they remain unconcerned about rising debt levels. The Reserve Bank has warned that optimistic borrowers may lead to a debt blowout. But the Assistant Treasurer and Minister for Housing, Michael Sarkar, says that the federal government is pleased that high confidence levels, the strength of the economy and the improving unemployment rate are leading to a strong housing market, with first home buyers at 15-year highs and owner-occupiers dominant. On average, he says, we're looking at affordability being at 20-year highs, which is why first home buyers are at such high levels and why owner-occupiers are nearly 3/4 of the market. He says that owner-occupiers are in an absolutely dominant position because $220 billion has been saved by business and households during the pandemic. A lot of that $220 billion is now finding its way into investment in housing. Australian homes are in short supply and are selling at record speeds, with the average number of days that homes are listed for sale hitting record lows in every state in March. According to a housing indicators report by realestate.com.au owners REA Group, dwellings were listed for 48 days on average last month, which is down from about 60 days in January and 71 days in June last year. Properties sold the fastest in the ACT at just 25 days. Following close behind were NSW at 27 days and Victoria at 30 days. REA Group says that average views per listings have also been surging, with every state hitting record highs in March. Nationally, views per listings were up 6.1% over the month and 107% year on year. The report says that the growth can be attributed to multiple factors, including government support packages for first home buyers and limited available stock. Buyers are searching for more expensive properties than they were a year ago. They are also looking for more space, with inquiries for house and land surging, while demand for units has very much softened. Rental vacancies remained low in March, and rents continue to rise in the smaller capital cities and in regional Australia, according to figures published by SQM Research. So on a national level, the vacancy rate sits at 2.1%. And vacancy rates are below 1% in 5 of the 8 capital cities. They're 1.5% in Brisbane after vacancies fell in March in Melbourne, Canberra and Darwin, and they remain unchanged in Brisbane, Perth and Hobart. SQM says that overall, the national residential rental vacancy rate rose to 2.1% in March from 2% in February. The rise was driven by an increase in vacancies in Sydney from 3.3% to 3.4%. With vacancy rates tight in most locations other than specifically inner Sydney and inner Melbourne, house rents have risen 14.7% nationally in the past 12 months, while unit rents rose 6.5%, pushed up by really strong growth in regional locations. House rents rose 2% or more in Adelaide, Perth and Brisbane over the month to the 12th of April, while unit rents also rose. Over the year, rents have shown strong growth in the smaller cities, including rises of 25% for houses and 11% for units in Darwin. Leading mortgage brokers say that the banks are cautiously taking the brakes off home lending and removing extra checks on borrowers that were introduced at the height of the pandemic. Now, this trend comes amid an ongoing surge in new lending, but brokers say that they are not seeing a rise in high-risk borrowing, and nor do they believe regulatory caps on home lending will be introduced anytime soon. Several brokers, including Aussie Home Loans and its merger partner Lendi, say that the banks have become less conservative compared with the height of the pandemic last year. Aussie Home Loans says that the banks had pulled in their horns during the peak of the pandemic, but they are now taking a more commercial approach to credit assessments. We are seeing a more balanced approach by the banks, say Aussie Home Loans. Lendi says that the proportion of loan applications where lenders are requesting more information from the customer has dropped from 48% in March 2020 to just 28% this year. As always, everyone, we will keep you posted on all things property from around Australia as our year progresses. I'm giving you the best commentary and content here on this channel. So please, for my end of video beg, please just let me ask you to hit that subscribe button, click the notification bell too. I really do appreciate your support. If you are enjoying this free content, then just quickly hit that like button too. And I will see you soon. Bye.